Hey, ladies and gentlemen, welcome to Wednesday's Market SITREP here at Top Gun Options. My name is Matthew Buckley. My call sign is Whiz. And make sure you join me at 1 o'clock today. I'm going to open up the doors to our regular accelerated retirement brief. That's every Wednesday at 1 o'clock today. We're going to open our squadron doors if you want to do a drive-by and take a look at what we do here at Top Gun Options. All you have to do is head to go.topgunoptions.com/brief. And you can join us for free at 1 o'clock today. And as a little added sugar there, I'll give you access to our OPCL, our Options Pocket Checklist, which is actually a $45 value. So not only is the session free, we're going to give you $45 worth of content there. Okay, what's going on? The president's getting ready to meet with the the IMF head or the EU head, one of the heads of the five families, and this is getting stickier. A lot of the arrows in this potential trade war are starting to fly back and forth. But one of the reasons China's devaluing their yuan is for them. Not necessarily for the president. I know it's kind of sticking it to us a little bit too indirectly, but their economy and their stock market, I mean, they were in technically in a bear market territory a couple weeks ago, or the Shenzhen or one of their exchanges hit bear market territory. So they had to get involved in capitalism the other day. The PBOC, the government, got involved in capitalism, essentially exercised their put to prop up their markets. Now, as I covered yesterday, this is a sugar high right here, folks. This is great. People go, oh, yay, the government stepped in to add a bunch of liquidity. Until the drunks sober up and go, well, wait a minute. If they're getting involved in capitalism here as we were imploding, it must be worse than we actually thought. And that's usually when the panic sets in. So be very, very careful with this. I know it looks like so China's fighting with two hands. They got a trade war fight with Donald Trump with their right fist and their left fist. They got their own problems. So this is one of the reasons I think the president feels that he's got some airspeed on his jet here to engage in a trade war with China because, heck, we might get a 4 or 5% GDP print out of us on Friday. Jobs are strong. The economy's strong here in the United States. So he feels that he can fight this out. That's who he's meeting with, the head of the EU. So he's meeting with the head of the EU today, and he's ripping apart his domestic critics. I actually had dinner last night here on Las Olas down in Fort Lauderdale with a great couple friends, but also bumped into Roger Stone. So got to hang out with Roger Stone last night, and he signed a copy. So there's Roger Stone, obviously good friend of the president, and also a bad enemy of Mueller. He and Manafort are Bob Mueller's two targets, but very interesting. But it's funny because look at this headline: Trump plans 25% tariff on up to $200 billion in foreign cars as advisors helpless to stop him. So I've covered over the past couple weeks Steve Mnuchin, our Treasury Secretary, Larry Kudlow from CNBC, who Trump brought in kind of as another adult, and Peter Navarro, one of the president's trade advisors. All three of these folks have said talks have broken down. We're not even talking to China anymore. We're literally in a trade war, folks. But think about it. We've been in a trade war for decades with China. We just haven't been paying attention or cared, right? We thought our goodwill and flying around the world and bowing to people would make them love us more. It only made them laugh at us more, folks. So making trade open and fair, if you have a problem with that, you don't get economics. Now, I get the tariffs ain't good, right? I know the definition, guys. It's a tax and this, and it gets passed on to us. But they don't go on forever. And when you're on the horrible end of agreement, the only thing that can happen is it gets better, right? We can't get any screwed anymore by China, essentially. So we're going to talk about this all at 1 o'clock today. I'm keeping an eye on oil, a lot of developments in oil. Obviously, Monday, and it seems like it was a year ago, it was 2 days ago, the president tweeting Rouhani in all capitals saying, essentially, you see what I did to North Korea? You're next. And nobody cares. Same thing on Monday. The president rips apart Amazon. Stock kind of hovered. And then yesterday it was up 1.5%. So same thing with oil. We have a good iron condor that we legged into yesterday in our primary live trade brief on the XLE. And that one's looking good. If you don't know what an iron condor is or calls or puts or anything like that, make sure you join us here at Top Gun Options, folks, because I'm going to teach you all of that stuff. We have 8 sessions that are about an hour and a half to 2 hours. 7 o'clock at night, glass of wine, and we just talk about that tactic in detail. We start with the basics of options. This is a call, this is a put, and 8 sessions later, you're flying off the pointy end of your brokerage account there, delivering justice. So head to go.topgunoptions.com/brief and at least join us today to see what we're all about, and then I'll tell you how you can join us for a full week of trading next week on me. Here's what's interesting, folks. So we had this rip your face off rally yesterday on the Dow. NASDAQ was actually down yesterday, if you noticed. And one of the Whizisms you're going to learn, we saw yesterday in full force. The market was up and the VIX was up yesterday. So market up, VIX up, something is up. And the something that is up is that this rally is running out of steam here. I call it the McDonald's rally. Look at this one off the 200-day moving average. Back to the 50, rally off of that, back to the 50. It's like the golden arches here. We're going to do the same thing here. I mean, Q2 earnings are doing pretty good, but here's the problem. So yeah, Q2 earnings are off to a good start, but the but is the forward guidance. Okay, a lot of great earnings this past quarter, but remember, earnings calls are broken up into essentially 2 parts. The looking backwards, hey, it was a great quarter, and then the forward look, which is is 99.9% of the time is what the stock reacts off of, is the forward look. The forward look is the but, and there's some uncertainty here. So this was yesterday's headline, earnings boost U.S. stocks. Here's today. Blue chips edge lowers, trade tensions way. So remember back here with all these huge market freakouts, folks, this was based on trade tensions, right? Markets imploding. Oh my God, we're going to get into a trade war. Somebody save us. We're actually in one now, and the market, it might be inoculated to all this trade war fear. But remember another wisdom I'm going to teach you. The market only cares when it cares. We could literally wake up tomorrow and the Dow be down 1,000 points and the headline would be renewed trade war fears. I think CNBC or Fox Business, all these financial media, they have like those stock headlines ready to go for when, not if, we're going to have one of those big pullbacks. So Q2 earnings are looking pretty decent, but it's the forward guidance that is a little troublesome. Friday, as I said, we're going to get GDP. There might even be a 5 in front of this decimal point, folks. This is some good stuff. So like I said, Donald Trump's got a little airspeed on his jet to be able to maneuver in a trade war, not only with the EU, but with China. So things are looking pretty good. Okay, we had a great one-day trade on Tesla this week. We put on a bear call spread, a weekly bear call spread. So this trade would have expired Friday, but we got out of it yesterday for a $1,500 70% profit in one day. And actually Tesla's up a little bit today, so I'm glad I got out of it. And that's one of the reasons I got out of it yesterday. Yeah, it's up over 1%. This thing's in trouble. That right there looks like a dead cat bounce, just like this one. Implosion, dead cat bounce, implosion. It's going to head lower. But anyway, good stuff going on. We covered Google, China, Apple, Amazon earnings. We might actually, believe it or not, talk about an Amazon earnings trade. And I don't trade earnings, but this might be a trade through earnings, because Amazon is just the gift that keeps on giving here at Top Gun Options in our model portfolio. Back in October, I said ditch Facebook, ditch Apple, target all your firepower from those two into Amazon because of essentially the political risk. There's more breaking news today about Facebook. They were in China for a half a second, then China just booted them out. There's more regulatory issues. Apple's getting hammered by China. Amazon is just whistling past the graveyard. Even presidential tweets ain't keeping the stock down. So maybe we'll talk at 1 o'clock today in about an hour or so about an Amazon trade through earnings. Okay? So join me in about an hour. Hopefully you're getting this right on time. Head to go.topgunoptions.com/brief. And even if you're getting this after 1 o'clock and you didn't get to sign up for the webinar, and I'll send you out the replay later, okay? Even if you can't join us today at 1 o'clock. All right, folks, I got to run. I got to get ready for our 1 o'clock webinar. Have a great rest of your day. Happy hunting. Make sure you hedge, and I'll see you in the live trade briefing room shortly.